Good morning, everybody. I'm really glad to be here and also talking and possibly challenging the panel, who I'd just like to quickly introduce to you, order here. Kevin Lomax from Diners Club International, Tsipi Alexander from American Express Card, Setuma Soroka from Citibank, and Karen Green from eNet. I want to just start off, I like context a lot, so I want to read you a quote from a writer called Robert Safian, and I start quite a few of my trend presentations off with this because it's really interesting to understand where we are in history. And it's a very exciting time, well, for a trend spotter. For a lot of businesses, it's a very nervous time. And essentially that is what I track. I track disruption in business trends, and for me it's a very fascinating one, but obviously for the industries it really is a difficult period. So just to start off, what Robin Safin says, our institutions are out of date, the long career is dead, any quest for solid rules is pointless, and since we'll be constantly rethinking them, you can't rely on an established business model or corporate ladder to point your way. Silos between industries are breaking down, and anything settled is vulnerable. The next decade or two, we're in for a lovely ride here, the next decade or two will be defined more by fluidity than by any new settled paradigm. If there is a pattern to all of this, is that there is no pattern. And the most valuable insight is that we are, in a critical sense, in a time of chaos. So when I start tracking disruption in different industries, it started from about 2009 when the print media industry was first hit by digitization. It then moved into the magazine industry, the advertising and marketing industry, and where it's starting to, I call it the current war zone, is e-commerce, mobile m-commerce, and especially, as you can see from Uber transport and the hospitality industry, which is smack bang in your industry. Where we're going further after that is the automotive industry, which is still going to affect this industry, as well as financial services and healthcare. Those are the ones that are about to be really hit with that. So let's just start off with this, because this is an interesting one that I've been tracking for quite a while. From plastic to virtually painless. Is it going to be that painless? Because technology is great until it doesn't really work. So we all love it, and then suddenly something happens and we're not too happy with it. So I want to just ask the panel just for possibly some just quick opening statements, possibly on where each of your organizations are, or otherwise where virtual payments are within your own spaces. So can we start, ladies first?
So I'm representing eNet today, and basically eNet is a payment solution for the travel management companies that's redefining the way one pays suppliers today. So we can elaborate a little bit more on that a little bit later, but basically in a nutshell, it's redefining payment solutions for travel management companies.
Great.
Hi, Tsipi from American Express Corporate Cards. As you may be aware that Nedbank owns a license for American Express in South Africa, so we partnering globally with American Express, which is a global brand, in driving not only virtual but also new forms of technology such as contactless payments, etc. So we do really see this playing a big role not only in travel, and online payments, but across the board to B2B payments, and there's a lot of work that we're doing there.
Good morning, everyone. Setuma Soroka from Citibank. As some of you may know, Citibank is the largest global bank by footprint. And also we have the largest footprint in terms of local currency issuance. We generally have a niche focus in terms of who we bank with, what we do, and so forth. And our strategy since 2008 has been really to streamline what we do, who we do it with, and how we do it. And fundamentally, that plays in also into the commercial card space or the corporate card space, where you're having these developments and innovations, whether you're talking about standard card payments, traditional B2B solutions, or moving to the more sophisticated virtual world, where we're seeing a lot of interest and competition, if you like. But it's a space that is evolving quite rapidly, and a space that we fully understand globally as well.
Great.
Yeah.
Thank you.
Good morning, everybody. Kevin Lomax from Diners Club. I think to go straight into Dion's question around virtually painless, this concept of a virtual card in the Diners Club space is something that's not entirely new. We made our Lodge card a virtual card a long time ago, which we started distributing to you through an online platform. And we just see our virtual card that's coming next is just the natural evolution in that phase. So virtually painless, let's hope so. I think what will always require in any kind of innovation and disruption is an element of change management and adoption from all parties in the value chain, the card provider, the travel management company, the travel buyer, and the various suppliers. And I think to make it as painless as possible is going to be how well we can integrate all those parties into meeting the requirements of everybody that's going to get the benefit out of making even more plastic virtual.
Okay. I'd like to pick up on that, because one of the things, especially when you're tracking disruption, is the change gap between where consumers want to adapt to new technologies, so companies are forced to innovate with that. But then there's also the lag. It could be within the industry, it could be, as you said, within change management. Where I'd like to ask each of you, what do you think the stress points are? Where are the problematic routes to market, so making it painless? What is the barriers, and is it the consumer? Is it part of within the industry? Where do those challenges really lie?
So from an ENET perspective, the challenges are around fraud, reconciliation. Those are two key points to mention. And you know, today a large card that you know, goes out as a single number, which you know, suppliers have access to. You know, they've got access to fraud, and whereas the ENET virtual account number, which is determined a VAN, is a unique number each and every time. So from a risk perspective, one can define an amount to that card. One has a unique number. One can do a supplier, drill it right, lock it down right down to a supplier, and lock it down to even a duration. Obviously, that alleviates you know, a lot of risks. And from a reconciliation perspective, you know, when creating the virtual account number, the VAN, one can put in as many references as you like. So, you know, it's saving the TMC, the travel management company, to reconcile a lot easier, because all of that data is passed through. Ryanair is notorious for not passing that data through to the likes of the card companies, whereas when you're creating a virtual account number, you have got the ability to add in employee numbers, reference numbers, as much data as you wish, so that you've got online access to reporting, and you can track it a lot easier.
But in terms of the industry, is there an understanding of what ENET services are, and are they able to fully utilize those services?
Yes, because the TMC is in control. So the TMC is in control of obviously issuing, you know, and paying for airline tickets and paying the suppliers. So definitely from a TMC perspective, they're in control of the card, of who they give that card out to. So alleviating the risk factor.
Okay. For the gentleman, because it's interesting, because what I'm seeing, especially in terms of disruption, is you are seeing different players come through. So, you know, ENET not being a traditional part of a banking system that's come through, and you're seeing a lot of different players. And it was interesting. There was a discussion in my office yesterday that in the digital era, your threat is not necessarily actually within the industry, your competitors. It could be somebody else doing something. So Apple creating Apple Pay, a lot of different pay gates. So from the more traditional card holders and banks services, what are those challenges, not only in terms of competition, but again, the route to market in terms of people understanding virtual payments and adopting and using them fluidly?
Thank you, Dion. So you're quite right. When you speak of competition, a lot of changes, a lot of non-traditional banking competition coming into the market, which makes it challenging but also exciting times for bankers. Apple Pay, for example, as you mentioned, has really revolutionized payments not only for customers and consumers, but also has encouraged B2B and procurement changes in terms of virtual card. If I look at what some of the challenges or the stress points are that we have found, and this would depend on whether it's coming from requirements from travel management companies looking to service their corporates or directly from customers. The one is around the need to integrate more and more into existing systems. So the ability to build a one-size-fits-all solution then as a result becomes more and more difficult, but it's more around how flexible our solutions can be to work with the travel management companies' existing systems, but also with the corporates, depending on the level of control that's required. Second challenge that we've picked up specifically in the virtual payment space is around funding. The ability not only to pre-fund a card, but for the bank to offer funding to not only travel management companies, but also corporates to get over that challenge. So, and our solution does comfortably deal with that challenge. And the third really is around merchants being aware of how these systems work, and how to deal with challenges that you have when faced with a traveler who could be stuck at a hotel, or etc. So a lot of merchant education is required. A lot of customer and cardholder education is required. Globally, we have found that the growth is there. So for American Express, in our European markets, our billings are up by 47% on virtual card. This was launched in 2008, by the way, by American Express globally. So we are seeing a lot of global usage. The challenge is going to be in South Africa. How do all the representatives here at the table here today really look at educating the market and driving usage?
Yeah, I think just to probably expound on the idea that the key challenge around the virtual, moving to that virtually painless space is really change management, as highlighted earlier on, but also it's that education between all the parties involved, whether you're talking about the travel management company, you're talking about the corporate, because all these solutions are very fancy, and as the providers here, whether we're doing it on a prepaid basis or whether we're doing it on a credit basis or a funded basis, fundamentally it's how does the end user seamlessly integrate with this, and what's the user experience? And I think one of the challenges that you find within very big organizations like the ones that you have here, from a banking perspective, when answering your question earlier about new entrants, is that there's a tendency to focus on the product itself and not so much on the end user and how they experience the product itself. So the products are fantastic and they do the similest things and they do it equally well to some degree. But I think it's who will give that end user experience, whether you're talking about the travel management company, whether you're talking about the corporate buyer themselves. But fundamentally, I think that's where the heart of the matter is. How do you actually make a seamless process and a good end user experience?
Okay, I'm glad you. I'm glad you brought up the user experience, because for me, any parents in the audience, UX for me is the career and industry of the future, because we are moving, if we're talking about virtual payments, we're moving closer and closer and closer to what people are calling in the trend space transhumanism or singularity. It's when technology and humanity start completely meshing together, and user experience is part of a technological arena at the moment, but for me it's going to jump out into the offline space, and it is. As a travel industry, as Kate was saying, when things go smoothly, nobody kind of acknowledges it. When things go horribly wrong, then really bad user experience is what hits you. But Kevin, to continue the conversation, what are those challenges for you?
So I think the biggest challenge that we have is making sure we're engaging with customers and trying to understand what need we're trying to solve. I think once you start to unpack that, then you can position the solution in the right place to solve that particular need, and then find the right partners to work with around that. So you mentioned innovations and disruptions like Uber, Airbnb, Apple Pay, those kind of things. At the heart of all of those disruptions is a financial transaction.
Yes.
And that financial transaction is initiated by companies that have been in the industry for hundreds of years. The card associations, the banks. If you even look at something like a Google virtual card that's out there now, that's a partnership between Discover, one of our parent companies, Bancorp, Citibank's involved in some of those things. And I think that's really where we found our niche, is to be at the heart of the exchange of money and the exchange of information, which is at the core of making the business work. What we also want to understand is what the pain points are. So if you're trying to solve a pain point around something like cash flow, then prepaid might not be the best solution. If you're trying to solve a problem around information, you've got to make sure you're getting the right level of data and presenting that back to the customer in a way that they can interpret and integrate further into their systems that are upstream. So it's that constant discussion, talking about the industry, unpacking those pain points, and evolving the solution to evolve with those pain points, I think is the way that we want to go. And there's obviously an emerging trend. There's new people coming into the sector, and they have different expectations of what they want that experience to be. And it's just important that we remain at the heart of those discussions. Use our core competence, which is the exchange of information and the provision of the exchange of money and the provision of data, but then working with partners to make sure that we just grease the wheels of the entire value chain.
Okay, that opens up a very interesting Pandora's box for me about data, because we in this world, again I say at this juncture in history, at the turn of the last century we moved from an agricultural into industrial era. We're now moving from a post-industrial into a technological knowledge and metadata era. And when I said the future disruption is going to be in healthcare with wearable tech, we're going to do very much like what happened in the banking industry, is we're going to take more control about our own health records and recording of that. And they said the next golden egg that people are going to be vying for is called care data. So that is your health record. So I want to throw that interesting question into it, because obviously with virtual payments, and as you said, Kevin, it is about tracking the data and to user experience as well. Ostensibly, people saying we are collecting this data so that we can give you a better customer experience, but of course customers are also getting a bit freaked out because everything is being recorded and they've got a digital trail. So for the different companies there, what are you doing with that data? Is it being helpful, and is it being pushed around the industry so that the end user can be, so the industry can benefit, or is it just the financial part of it that is being tracked for that? How do you share the data, and if you do, how do you do that? Again, I'll start with Karen.
So from an eNet perspective, the data is secure. That's the first point. The data is being uploaded by the TMC themselves in terms of what they want to see. And we then also obtain data from the supplier, and we match that in obviously returning and tracking a valuable report, online report that's then made available to the corporate and the travel management company. From a security perspective, as I mentioned, it's what you put in is what you get out. And from experience, you have lines and lines of data that is, of no value to the TMC or the corporate. With eNet, you now have valuable data that is, as I said, once again, an online, it's made online, made available to the TMC, that they can extract from a secure portal.
Okay.
So from a security perspective, you know, that data is owned by the customer.
And what kind of data would you be able to share, and how would that actually help TMCs or people in the industry to make it a better user experience, or to understand their customers better?
Well, from a TMC perspective, that data belongs to them. So they've got all that data at their fingertips. So in terms of sharing data, obviously there's a protection against that. And therefore, it's in a secure portal, and that data belongs to them. So they've got that data at their fingertips, and they can choose to share it and use it as they wish.
Okay. From any of the traditional card holders, because that is a golden egg in terms of your transactions and logging not only geographically, but where, how, what you're spending on. That's really valuable information you're sitting on. So how is that used?
Okay. Thank you. So yeah, the very important point you've raised around data, and for us, it's not just about the bank's ability to have and own the data, but more importantly, to share that with either key service providers in the value chain. So our data is not only known to the bank and secure, but it's also shared with travel management companies, and it's also shared with corporates. And this really allows for that unique balance sometimes, where the corporate may want as much of that data being managed, and the special services offered by the TMC to sit in that space. And we allow for that to occur quite smoothly. Some corporates also want the data in their systems, and we allow for that also. So 3 key things for data or concerning data is it should be real time. So the ability to see what happened 24 to 48 hours ago is very, very important, as in sometimes this can be useful in tracking travelers, etc. The second thing is, as mentioned before, security. That is really, really key, and that's in the bank's secure systems, and virtual cards issues a unique card number every time. So it really limits the ability for fraud, and we've gone globally to look for examples where fraud has impacted virtual payments, and we have not managed to find any examples of that. And the third around data is the ability to identify uniquely, so your reference field data, to be able to see where did CP Alexander go, how much did he spend. If I look from our corporates, what a lot of our corporates are moving towards is how do I identify the cost per trip, and how can we take all of the data in the trip. So think of your VAT claims, etc. How do we get all of that data, including card and wallet spend throughout the trip, and bring it in either through the TMC system or to the bank. So yeah, those are the key things that we're focusing on from a data perspective.
There's nothing as frustrating for a travel manager than trying to reconcile who's traveled where, when, and why what's this payment for? And I mean, I've received those kind of queries where it's coming from the client that I don't know what's this for, and fundamentally data helps with that. The issue of reconciling against spend, I think it was mentioned earlier on around wastage. The travel manager wants to remain invisible, and the more invisible the data, the more visible they become, and it becomes very important to have the right amount of data for reconciliation purposes. Other departments within the corporate also are keenly interested in this data and this information, whether it's talking to internal travel policy governance, compliance with internal policies. The data is critical and key for those aspects. Also then you have, as a buyer, data gives you negotiation power. It's easier to get to an individual or to a supplier and say, I've spent X amount over this X period, than saying, just give me a discount. So data is really powerful from that perspective, and I think it's, as you mentioned, it is the golden nest really for corporates. the more data there is, the easier it is to remain invisible as a travel manager. The easier it is to reconcile it. The easier it is to monitor and track all the expenses that are going through the corporate. We're seeing cycles where corporates are getting very stringent in terms of their travel policies, being very stringent about what is being spent, and you can't have visibility on that without the data and the information. And the virtual card really does that, whether you're reconciling on a basis as you are making the request for the transaction on a real-time basis, as was highlighted earlier on, or you're actually doing it on a later basis. As long as that information is there with unique identifiers, it makes that possible.
Okay. Kevin, it started with you, so any thoughts on the data issue as well?
Yeah, I mean, I think one of the most important things around data, and it was mentioned around, is the security of data. There have been some very high-profile data breach issues in recent times. The iPhone selfie issue. Any victims? The Ashley Madison, I won't ask if there's victims. Those kind of things. So when you're giving data to a party, I think it's important to understand what your partner is doing to protect that data. Now, in financial services, we are massively regulated.
Yes.
Our data sits behind dozens of firewalls. It sits behind massive encryption technology. And I think that should give the industry a level of comfort, is that the chances of your data being corrupted and breached in our environment is low. Not zero, but low. And I think that's important for people, because you need that level of comfort. You need to be able to give your customers the level of comfort that the data is secure, the data is being well managed. And when the data then gets used, and when somebody finally defines what the word big data means in this industry, then I think we'll be on a solid path to really taking that data and turning it into information that can be used in management systems.
All right. I'm going to just take a slight divergence. We're almost near end of time, and then we're going to open up to the floor for any questions and answers. But you did ask a futurist to come and moderate this conversation, so I'm going to throw something futuristic at you about bitcoins. Because it's been on my radar. People can't quite get a grip on it, but I asked my team just to have a look around. And we came up with somebody from, it's the director of Costa Rica travel market, Monica McIntyre, and she was just saying she became fascinated by the prospect of payment by Bitcoin. And it says the idea of a payment method, and this is going to be very controversial for this year, the idea of a payment method that would allow us to reduce transaction fees from an average of 5% to 1%. Which is obviously going to hit at the traditional card holders, but it's still kind of in the ether. I attended something at Gibbs about a month ago about fintech, financial tech, and the speaker from the Netherlands said, just show of hands, has anybody got any bitcoins? I expected maybe one person to put their hands up, but about 40% of the audience actually put their hands up. So I was quite surprised at how people were already starting to look into bitcoins. So again, I'm going to start with you, Karen, because that's kind of in that virtual futuristic e-net space. Any thoughts on bitcoins and that kind of futuristic way of payment? Because they said, again here the quote was, Bitcoin has no risk to credit card fraud or credit card chargebacks. This is a huge problem for the travel industry because the payments are often large, and we were talking a lot about fraud and recon. So is this a cat amongst the pigeons?
I think I would comment in terms of if we're talking about risk again, and we're talking about fraud, again, it's about the user having control. And obviously the value around the control is in terms of what you put out there. So from a control perspective, the value that e-net offers the customer is obviously each unique virtual card, going out there in terms of locking it down type of thing. So because e-net owns the card, not like most card companies where the TMC or the traveller owns the card, e-net's fees are less than 1%. So you mentioned, the cost to transact being 2 or 3%. eNet is around 0.45%, so that's less than 1%. So from a security perspective, obviously, as I said to you, you know, the risk factor, there's lots of controls around there. And from a rebate perspective, yes, you know, there are charges, but they're minimal.
CP, I want to jump to you because I am also the owner of one of those American Express cards where at certain establishments I go, no, we don't accept that because of the high charge. So is Bitcoin a threat? Is it something that's on the radar and that you guys are discussing?
Yeah, so I don't see Bitcoin as a threat at this stage,
yes.
And I will tell you why. Is that firstly, so I would challenge, and I don't know, you perhaps know the answer, but if you had asked the same question of the crowd where 40% of the people had Bitcoin, to ask how many of the corporates that they may be employed by stores their funding in or their cash in Bitcoin, I suspect you'd have the opposite answer. Yes. So because banking is highly regulated, it does provide some protection from that perspective. However, I don't think that's the view we should have as a banking industry and overall, because from a traveler's perspective, Bitcoin may come in via the consumer leg, where consumers may want to travel and pay using Bitcoin. So it could eventually get there, but not there just yet. When you speak about fees and transaction fees, already right now, so if I look at corporates in the main, many large corporates, you know, don't have to pay fees in terms of using cards. And if you look at the regulation that is coming through also in terms of interchange across the board, so not only in Europe and the US, but also in South Africa as recently as this year, you will see those costs coming down over a period of time. Finally, around security, as I said before, we've had no incidents that, you know, and this is from a global perspective of, you know, serious fraud. So we're quite confident that the virtual payment card can stand up against Bitcoin from, you know, that perspective. But once again, it's really around the consumer's need, it's really around the corporate's need, and eventually it would be about how does the bank incorporate this or the TMC or incorporate this into existing systems. It's not for the bank really to decide what the consumer wants to use.
Okay. Before I get to the Citibank perspective, I was interested because I asked my research team just to, when we started just looking at the Bitcoin, was quite surprised at, and I agree with you, it's probably not on a corporate level, but on an individual level, but the acceptance of Bitcoins was interesting in terms of hotel bookings as well as flight bookings. That there's a lot of companies that are starting to offer that as a service. So when things come onto that radar, for me on that sort of trend radar, I never ignore it. So would Citibank ignore something like this?
Not a chance. Citi actually has a what we call an innovation lab where all our geeks sit in Dublin and try and understand all these disruptive innovations that are coming through, whether it be through Bitcoin or any new forms of payment or methods of payments. And I think the key challenge around Bitcoin at this stage is security, transferability, convertibility, and really just acceptance. And I think in the age that we're living in, and the nature of the globality of or how interconnected we are across the globe is that it's maybe to even step back a bit, that 5 years ago, no one would have thought mobile would be such a big monster. And in Kenya, payments are made via mobile, literally, through M-Pesa. So it's any player in the market where there's an exchange of currency, where there's exchange of payment, they would be very ignorant not to try to play it somewhat, or even strategically position themselves to understand what is the implication of what Bitcoin can do in the market. But we will definitely see more of those kind of innovations around this exchange of currency, exchange of value across the board.
Yeah. Okay. Kevin, final word from you.
Yeah, so I mean, I agree with the comments, particularly that if it's going to disrupt any market, it'll be the consumer to business before the business to business market. I think that certainly is something to look at. Within our parent company, Standard Bank, we looked at the viability of setting up a Bitcoin exchange in the course of last year. We decided that it wasn't a viable business case at that point in time. We also have our innovation lab looking at these sort of things and encouraging disruptors to come and work with us in those labs to find ways to make it easier for people to do different things. But I think the one thing is, you mentioned the 5% costs. I mean, I'd love to find a way to get a little bit more of that 5% because I think it might be overflated and sometimes people throw problems there. I don't think people fully understand that there's a lack of transparency in some of these things. So in a Bitcoin type transaction, by the time you've done that transaction and got it through to an airline account, for them to turn that Bitcoin into a currency that they can then use in other courses of business, I haven't looked at what the Bitcoin exchange rates are doing lately, but there was one stage when there was massive fluctuation in Bitcoin exchange. And I think people forget some of those things. They look at one piece of the cost and they don't look at the entire cost of the transaction and what it might mean from a cash management or treasury management point at the end of that. And that's where I think also just making sure that there's transparency and a good understanding will go a long way to making sure people make the right decisions before they just jump into a particular type of transaction.